Alright, what's going on, y'all? Welcome back to the Average Money Works channel. This video right here, we're going to go over what is the stock market. So if you aren't in the stock market, you know what the stock market is, but you don't really know what the stock market is, or you don't know what the stock market is if you've never heard of it. This video is for you. Make sure you guys like this video, subscribe to the channel, and we got a lot more content coming out. But to get this video started, we're going to go over all the basics of the stock market. So what is a stock market? What's a stock? What's a share? How do you profit? How do you get taxed? So if you guys are interested in any of these topics, stay tuned. I'm going to put all these topics right here. So these are all the topics that we're going over in this video. If you guys have any questions, make sure you guys leave a comment down below. I'll get that answered in the comments, or I'll answer that in the next video. So let's just go ahead and get right into it. So what is the stock market? So the stock market is basically a market where people go to buy and sell shares to other people. So it's like they're trading. So it's very similar. It's basically the same as like a Facebook marketplace, eBay, OfferUp. It's the same exact thing. So instead of buying and selling, PS5s or Jordans, or weightlifting equipment, the stock market is buying and selling shares of a company. So instead of buying and selling items, you're buying and selling shares. Somebody who's on OfferUp, they might buy a PS5 for $500, and now they're trying to sell it to somebody else on Marketplace or on OfferUp for, let's say, $800, right? So they're trying to make a profit here of $300. So essentially that's what the stock market is, but with stocks of a company. There's a couple different stock exchanges. There's the New York Stock Exchange. There is the NASDAQ, the London Stock Exchange, the Japan Exchange Group. So there's a bunch of different stock exchanges all throughout the world. The New York Stock Exchange is the most common one that people trade. It has companies like eBay, Disney, Apple, Tesla, Delta Airlines, JP Morgan, Wells Fargo, Uber, Snapchat. There's a lot of companies that have stocks in the stock exchange, and we'll get into that also. The stock market does have trading hours. Here's a list right here. I'm gonna put it like right around here somewhere, of the hours that the stock market's open. So if you're on the East Coast, 9:30 to 4 p.m., West Coast, 6:30 to 1 a.m. or 1 p.m. So, and then there's extended hours also. So you can trade before and after market hours. It's just a lot harder because there's not as many people in, so it's kind of harder to find somebody to buy your shares or sell shares from you. So that's just the basis. Getting into the next part, how do you begin getting into the stock market? You have to open up a brokerage account. You need a brokerage account to get started. So there's different brokerage accounts you can get into. There's TD Ameritrade, there's Webull, there's E-Trade, Fidelity, Robinhood. So there's a bunch. I'm doing this channel on Robinhood. So if you aren't in the stock market yet and you want to get started, there's a link down below. You click that link, you make an account, you get started, and you get one free stock. I get one free stock. It's free money. So what you can do is you can either hold that stock if you like the company, or you can sell it and then you can use that money to begin. You only need $1 to even get started because you can do fractional shares. So getting into the next part, with all of that being said, what is a stock and what is a share? So a stock is basically the company in the stock exchange. So for example, let's say you're playing Monopoly and you pick the thimble or the hat. That item represents you in the game. So when it comes to the stock market, the stock, like the Apple stock, represents Apple in the stock market world. So that's a stock. I don't even know why I wrote all this here, but that's a stock. A share is a unit of the stock. I don't even know why I'm writing because my handwriting is garbage, but a share is a unit of the stock. So you can be a shareholder of Apple by buying one share. So if you go to your brokerage account, and you decide to buy a share of Apple, now you're a shareholder. And when Apple does good and they report good earnings, everybody wants to get into Apple. The Apple price will go up, and that's how you make money when you own a share. Your one share price will go up as well. So that's kind of the basis of buying and selling shares in the stock market. That's how you make money. They also, if you hear the term ticker symbol, that's basically the abbreviation that the stock exchange uses to indicate what stock you're talking about. So if I just go to Robinhood real quick and I want to look at Apple, I type in AAPL. That's the Apple ticker symbol, and then it'll pull up the Apple stock. So as you can see, it's been kind of trading sideways, even down a little bit. I have $19 right now in Apple. If you go to the 5-minute or the 5-year chart, you can see that it's been going up very nicely over the years. So this looks like a very good company to get into and to hold for the long term. So that's one of the many ways that you profit in the stock market. So moving on to the next part, ways to make money in the stock market. There's many different ways, but one of the most popular ways, the main way, is buying and selling, right? Shares. So buying and selling shares. And what you want to do, and what people do, is they look to buy when the stock is low, and then when the stock rises in price, they sell it when it's high. And that's how you make your money. So if you buy it when it's 25 bucks, and then you sell it when it's 75 bucks, you made a $50 profit. And that's what you do. And then you wait for it to come back down. It might not come back down to 25. Let's say it comes down to 35. You buy it at 35, then it goes to 80. Then you made that difference. What is that? 45? 55 bucks. $45. So then you make a $45 profit. And now you made $95. But if you want to look at it this way, it only took you $25 to make that 95. So that's how people get into the stock market, is buying and selling shares that way. Another way is with dividends. And this is considered passive income. And passive income is basically money that you make without doing anything. So you don't clock in for work. You don't do any manual labor. You don't submit anything. You literally buy shares. You hold it, and overnight when you wake up in the morning, it's up and you've made money. So that's passive income. And what dividends is, a payment that a company will pay their shareholders for being a part of their company. So if you buy shares of a company that pays dividends every quarter when they report earnings around that time, they'll give every shareholder a percentage of their revenue. And that's what dividends are. So not every company does it. You have to look to see what company does. If we look at Apple right here, they do have a dividend of 0.69. So one company that a lot of people that I hear use dividends for is AT&T, and their ticker symbol is T. So if we go to AT&T really quick, right here their dividend is 7.17. If you have one share, when they pay dividends, you're going to get 52 cents. So if you own 100 shares, that's $52 4 times a year just for owning 100 shares of AT&T. So that's one way you can do it. And then also when you have this, you can do what's called option trading. And options is the same as buying and selling. Options is the same as buying and selling shares. The only difference is these have expiration dates. So you might buy an option that's going to expire this date. Another difference is that they all trade with 100 shares. So it might sound crazy and like you need a lot of money, but actually you don't need as much money trading options as you do shares if you're talking about hundreds, in the hundreds. So what that basically means is with options is you are writing a contract. So it's basically a contract agreeing to buy or sell 100 shares of a company, right? And because it's a contract, there's an expiration date. So if you want to sell your shares or buy shares at $25, right? You need that share price to reach that price by this date, or no one's going to buy or sell. No one's going to buy that contract from you or buy those shares from you or sell you those shares at that price. So options is a very different ball game. It's more risky. So this is definitely the more riskier investment strategy. So if you have money that you're not really holding on to for emergency purposes and you want to take more risks in the stock market, option trading would be for you. But if you're just looking to get in and invest and you want your money to grow slowly and exponentially, I would not consider option trading, but you can do it for fun. One thing that I'm thinking of doing with my account, once I get to a certain price, so once my buying power is at a certain price, I might take some of that money and throw it in an option and see what happens. But that's basically how options work. So it's kind of risky. You have to be able to mentally prepare to lose money, just because you have to be correct. And because there's an expiration date, you have to be correct in a certain amount of time. So if you own just regular shares, there's no expiration date. So you can hold them for 10 years and just wait for the price to go up through those 10 years, and then you can sell it. Options, you don't have 10 years. You only have, a couple months, or maybe if you do leap options, you can do, a couple years, but it's not going to be as safe as with regular shares. So that's the other way that you can make money. And these are all just ways of making money. Instead of trading time for money, you're just using your money to make you more money. So you can go, you're working your 9 to 5, making your money, and then you have the stock market. Money's put in the stock market to build, then you can collect it and do all that good stuff. So the more money that you have in there, the more money you can make, obviously. And I'm going to go over all of these other option strategies in another video, more detail, more in depth, so we can go over more terminology, because it's a very deep ball game. So you want to make sure you know what you're doing before you get into it. It took me a long time, but finally got it down. So now that you know all this stuff, what stocks should you get into? So what companies should you invest in? And those companies are going to be any company that you're already invested in. So if you have an Apple iPhone or an iMac, or you drive a Tesla, those are companies that you might want to invest in because you're already invested in it. You already put your money into the company. If you're out here representing the company by walking around with your iPhone, you probably talk to somebody about these features that iPhone has. So maybe they want to buy an iPhone. So you're already basically a shareholder in the company, but now you want to make money from it. So that's why you want to be into investing, because you can own shares of Apple, and then when Apple goes up, you go up. So that's one thing that you want to look for when picking stocks, is stocks that you're already into, just not in the stock exchange world, right? So that's one way. Another way is to make sure that the company is growing. So like I said, if we go to this Apple chart, you look at this is an Apple, but let's go to Apple real quick. So we go to the Apple chart. Come on, bruh. So if we go to the Apple chart, take this off. Right now it's trading sideways, so you're like, I don't think that company's going up, but you want to go look at the long term. So over the last 5 years, this is going up on an amazing trend. So this would definitely be a stock that you might want to get into if you're into Apple, and if you want to get into something long term. So Apple would be one stock. There's also other stocks, like I mentioned in the beginning: Disney, Spotify, Facebook, Tesla, Starbucks, companies that you deal with every single day in your regular life. Now you can get into it and be a shareholder and make money from the company. So there's many different reasons why you want to get into the stock market, all that good stuff. And once you have shares of multiple companies, so let's say you're into MGM, Starbucks, you're into JPM because you bank with JP Morgan. Let's say you like to fly Delta Airlines. So once you have shares in all these companies right here, this is considered your stock portfolio. I didn't spell portfolio right. Stock portfolio. So when you hear people talk about their stock portfolio, or they have a diverse portfolio, or diversify your portfolio, what that means is they have shares in companies in different sectors. So like Starbucks is consumer, JPM is banking, Delta is travel, MGM, and then you also have like oil stocks, tech stocks like Apple. So the reason why you want to diversify is so that if one sector goes down, people are selling all their positions in one sector, your whole portfolio as a whole won't come down also, because you got these other stocks in different sectors holding your account together. So that's one reason why people like to diversify. Also, other people invest in ETFs or index funds. So the SPY would be one, and this is basically an ETF, and an ETF is an exchange traded fund, and they Basically, it's like its own stock portfolio. So they have 500 companies, very diversified. So if you buy into the SPY and Apple decides to drop $6, you're not really going to lose $6 because you have other companies holding your stuff together. Getting into the SPY is basically getting into another stock portfolio. So that's what stock portfolio is. And then if there are any companies that you're not quite sure about, or you want to know more about the companies that you're getting into, you want to go to places where you can get all the information. So I like to go into CNBC. I have the app on my phone, so I get notifications when there's news alerts, when a company reports, like shocking news, something that might make their price jump up or go down. So CNBC, Yahoo News, Benzinga is another one, Investor Observer. You can just go to Google and type it in. There's a whole bunch of stuff on there too. So there's definitely different platforms, but CNBC is one of the main ones that I use, and Investor Observer. But CNBC is free. Also, I always have that channel up during market hours. I'm always watching. I have it in the background just in case anything happens, and I like to check up on it every now and then throughout the day, overnight, pre-market, all that good stuff. So all the information you need on stocks, CNBC, CNBC.com, CNBC app. So now that you know how to make money in the stock market, how it works, diversifying and everything, how you get taxed on all this. So how does the taxes work? So if you own one share of Apple, I know I'm using Apple a lot, but it's just easy because everybody knows Apple. If you own one share of Apple for 10 years, you're not going to get taxed at all on what you make. So if you buy Apple for $25 and now it's at $500, you're not going to get taxed on anything. The minute you sell it, you're going to get taxed on that difference. So, I mean, this is probably easy math, but for me, it's not. 475 bucks, right? So the minute you sell it, you're going to get taxed on the 475. And because you held it for over a year, so greater than a year, you get taxed 15%. So if you buy it today and you don't sell it until March of 2022, you're going to get taxed 15% on that. If you decide to buy today and sell tomorrow, so it's less than a year, and let's say it jumps up that crazy price too, so it's still a 475% gain, you're going to get taxed what your tax bracket currently is. So if you're currently getting taxed 25% on your income every year, then you're going to have to pay 25% on this too. So you're paying $118. What was that? $118.75 versus with this one, let's see what that 15% is. 71, right? So just for holding it over a year, you get taxed $71 versus if you do it overnight, less than a year, 118. So a very, very big difference. So it all depends on your trading strategy, your investment goals. Are you short-term or long-term? How long do you want to hold? But this is just how you get taxed. So if you want to know how you get taxed, it's either 15% over a year or it's your regular income bracket on the gains only. So if you put $500 in and then you make $600, you're only going to get taxed on the $100 that you made. So just so that you guys have that idea. So with that being said, don't be afraid to pay taxes. If you have to pay taxes, it's actually a good thing. You should actually be happy that you have to pay taxes because that means you're making good money. And the thing is, why wait for one time of the year to be balling and be able to afford the things that you want when you can be comfortable all year around and buy things that you want all year around? So just a general statement from myself. One thing that I like to just have in the back of my mind when I'm making all this money and tax season comes around, if I have to owe money, just be thankful that I made that much money that I actually have to pay some taxes. So I personally, from my job, I have them withholding a little bit more cash just in case I work a lot of overtime that time, or I end up making a whole bunch of money in the stock market. I have like a little cushion. My 60-40 method that I'm doing on my current account is also helping me save for taxes just in case I have to owe a lot of money. I'm using this method to have money already set aside to pay taxes so I don't have to worry about that. But that's basically it, you know what I'm saying? So that's how the stock market works. Like I said, if you guys have any questions, please leave a comment down below. I'll answer that in the comments down below, or I'll answer that in the next video. Otherwise, stay tuned for the next video on option trading strategies, and I'll talk to you then. All right? Peace.